Hi, Hugh Lambert for 𝐚𝐿 Financial Planning. Just want to talk a little bit today about the supply of natural gas from Russia into the EU, and it's been gathering a lot of headlines recently. So in July, Nord Stream 1, which pipes a lot of Europe's gas from Russia into Europe, was shut down for maintenance. And given geopolitical events, there was concern that it wouldn't open back up at all, and therefore thereby cut off Europe from Russian gas. Now, it did open up again at a significantly reduced level of supply. As a result, the EU have drawn up a contingency plan for member states to incrementally reduce capacity by 15% coming into winter. Now, Ireland has been excluded from that as we're not connected to the main European grid. So how does that affect us? If there is going to be a reduction in the availability or supply of gas, even though it's not coming directly to us, we'll definitely see an increase in the price of gas. A reduction in the supply of anything will increase the price. So likely, I think we'll see an increase in fuel bills coming into winter. Typically, and you can only really draw the comparison between the price of oil and how that impacts an economy, and I'll put up a graph shortly which shows increases in the prices of oil and the impact on the US economy, just as an example. So using that example, it does put economic pressure on, because you see a big price of inflation. A lot of industries typically will need gas for their functioning. I think gas supplies 30% of Ireland's overall energy requirement, and is responsible for 50% of production of electricity. So it is vital to the state. Now, the Department of Finance are not forecasting a recession, so in this instance it looks to be more of an economic slowdown. From the point of view of the investment markets for pensions and investors, for pension investors and investors, at this point in time, we've seen a pretty significant drop-off in the European market and the American market, which would suggest that they've factored in a fairly significant recession already. So even though we might see a reduction in gas, we might see a recession, it looks like from the investment markets point of view, that's already factored in, and the investors expect that's going to happen. Some investment managers are now saying, such as JP Morgan, are saying that they expect that we've come through the worst, and things should improve. Now, that's more in reference to the American market, and they don't have a reliance on Russian gas, so they won't be as impacted by that particular scenario. So I hope you found some interest. If so, please like and share. Thanks for watching.